Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 3:30 in New York. It is Wednesday, 3rd day of February 2016, and this is the Daily Report for Gold and Silver. We have a nice rally continuing in the precious metals markets, with gold trading up about 1.3% higher, 1141.80. That is our current print. That is off of a high of 1146.20. and a low of 1124.80. So we've got a substantial rally underway without a doubt in the precious metals market. Silver also trading higher on the day. It's actually up about 2.8% or 40 cents to the upside at 1468, low 1427, high 1480. So traders, without a question of a doubt, we are on a nice rally in the precious metals markets. Of course, we are long gold. We put a position on Monday and Tuesday, and then we added to that position on Wednesday. So all traders taking this trade should be double their normal quantity in terms of positions in the market. The reason that I did the add-on is I felt that if we had a genuine breakout in the market, and at this point it appears as though there's a decent probability that that is how this is unfolding, so far so good, so to speak, that we would get a nice, I think, $100, $130 rally in the market. Now, the first thing that we want to look at on this daily chart is we've got this series of linear regression or bear channel, cascading channel lines. And we talked about the fact that what we really saw was a sincere movement through this line, and that was what was going to really signal our breakout. Without a question of a doubt, we have done that at this point, and that is really clear by this last week of trading activity. So the next question has got to be, where are our various levels of support and resistance now that we've seen this market move? And are our targets, our exit strategy, is that still in line with the original exit strategy of roughly a 1060, 1063 in terms of where we thought this rally could take us? Now, to answer the first question, where do we find support and resistance? To do that, what we have done is we have created two fib retracements. And so we really want to look for harmonics, because that's going to give us the greatest indication, of course, as to what we are looking at. And when we look at the particular fib retracements, they both terminate at 1046. We've got one that starts at 1232 down to 1046, and one that starts at 1191 down to 1046. So we've got these two tops terminating at the same place. Of course, the longer of the two fib retracements has our different values here, and the shorter here. So the first thing I draw your attention to is we know that we saw 1100 as a pretty critical number. When we put that into this large equation, though, we don't really get any harmonics, and we are far away from that. So that's really not an area that we want to concern ourselves with right now. Now, the next level is this 1119-1117, 38% retracement when we look at the longer of these two retracements, and a 50% retracement of the shorter of the two. So we absolutely get a harmonics, and that harmonics is going to give it a little bit more strength. So as far as I'm concerned, major support in the market comes in roughly at 1120, and it's based upon this harmonics. Now, the next level that we really want to look at is 1139. It is not a harmonics. It is a 50% retracement of this longer move here. And as you can see, we are trading at 1142. So we are just about $3 above that. That tells me that my sense right now is that, assuming we have some solid moves, this level right here of 1142 should become support. So then where is our next real level of resistance? And I draw your attention to our 61% retracement level here. And as you can see, I've added the 61% retracement and level to the shorter of the two to see if there was some sort of harmonics, which there is. 50% at 1039 and then 1036. That gives us our harmonics here. And then, as I said, we're above that now, but that's the area we want to look at. The next real level of resistance is going to come in, and it's going to be based on not only this top, but a 61% retracement, which comes in at 1161. And that was, if you recall, our initial target in the market for our exit strategy. Now, we're only about $20 away from that. Our stop is sitting at 1107. We are going to want to move our stop up. I want to give it a day or so, but we're going to want to put our stop under 1038. 1038 has got to be the point in which your stop would go under, but let's see some support come into the market because we want to see if the market is going to trade to the 1050 area or the 1060, 65 area, because these are the two areas that I believe we have an opportunity to see gold go to. Traders that want to go ahead and move their stop up, you can go ahead and move it to just below 1136. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review.